Thank you very much. We're going to squeeze in, as we did in the first act, a large amount of activity, but with your assistance, I'm sure we will be reaching a timely conclusion. We'll continue very much in the mode and the way in which we ran the first half. We're going to start with the German ambassador's views on funding business and realising growth from a German perspective, and then move into two subsequent panels, the first chaired by Dame Clara Furs and the second by Sir Win Bischoff. So it's my very great privilege and pleasure to introduce His Excellency Georg Boomgaarden, who's been the ambassador to the UK for the last 4 years. Ambassador, thank you very much for joining us.
Ladies and gentlemen, at this very moment, the future of the Eurozone is certainly our major concern, but this is not my topic today. So if there are any questions, I leave it to Q&A. In most countries, by the way, there is now an outcry for a growth-oriented policy, and the main problem may really be where the growth shall come from, how it can be funded from after it has been misguided in real estate bubbles, where it has been hampered by huge state and private debt and sometimes fomented by toxic financing models. So the problem for us, and this is not only a German problem, but we have it too, is how can we do something to kick off a new positive cycle for the economy after it suffered from the financial crisis. Germany is convinced that injection of money beyond our means, financed by more debt, is not promising. Certainly, this is because it is not a problem at this moment of a business cycle needing anti-cyclical monetary policy. We had this just after 2008. That was correct. That was an anti-cyclical stimulus, which was right to do so, but we are no longer in that phase. We are in a phase where we have to deal with the structural problems of growth. Sometimes analysts wonder why so far many countries did not really get any sustainable growth and how to prevent a new recession. Sometimes bankers are blamed, sometimes it's lack of confidence among investors, sometimes it's the Eurozone. I think all of this has to do that we have still a lack of global confidence, and that is the main obstacle to growth. Maybe, and this is a bit absurd, but maybe there is today more confidence in the leadership of communist China than it is in our own capitalist economy. We should sometimes think about that. According to Business Voices, a consequence of this is lack of access to finance for SMEs in some countries, bankers being risk averse, and at the same time, by introducing Basel III and things like that, also not able to take risks on as they had done before. So the government is certainly having a hand in introducing credit easing measures and what to do to finance business. German SMEs may be a bit unique in Europe, having a slightly different financing model from many other countries in going much less to the international capital market, going much less to the big banks. There is a kind of a symbiosis of the German SME with the local saving banks. And when I go to Germany, I normally try to visit one or the other company. And I was very impressed to visit somebody who has a family business, 4,000 people working for him, but anyway, still a family business, exporting to 137 countries in the world, financing all investment out of cash flow. And whenever there's trade financing, he takes up the telephone call and calls the saving banks manager, whom he knows quite well from the German-British club. And he certainly needs not much paperwork to guarantee what is necessary. This may be a bit too idyllic because certainly also there are quite a lot of small and medium businesses who are not so easy in financing, but we have instruments for that. By the way, the banking system as such in the UK and Germany are very different. At the end of 2010, we had 2,093 banks in Germany with more than 40,000 branches. In May 2012, there were 155 banks incorporated in the UK. This is a huge difference. In Germany, it's just the local banks, and many of them also in public ownership or publicly guaranteed, the saving banks, or structured cooperatives who play a big role together with the local branches, which should also not be underestimated, of the big commercial banks. I will not talk much about financing big companies, because they have access to the international capital markets, and I think you understand much more about that than I could ever try to understand. But local banks in Germany have a mandate to support local business, and this is important for the German economy. The IMF has, by the way, called the German banking system inefficient because it doesn't play a large role internationally. However, the system has been effective in securing a strong business infrastructure across the regions in Germany. And this is a factor in the success of the German, mainly family-owned Mittelstand. The Vickers report, in fact, here in the UK, has addressed some of the weaknesses of the British banking system, and the creation of banks tailored to the needs of SMEs is part of the recommendations, and therefore maybe we have something to exchange in our experience. SMEs are the backbone of the German economy. Just some numbers. Firms with less than 500 employees employ 15.3 million people. Only in the first half of 2011, they alone created up to 300,000 new jobs. And 99% of all enterprises, 61% of employees, 51% of value added, and 39% of turnover come from these SMEs. So this is really the backbone. And we are a market economy, but certainly, as all modern market economies, we are not free of state intervention. So let me mention first of all the KfW, itself the third largest bank in Germany, according to balance sheet size. KfW is fully state-owned, 80% federal, 20% federal states, and is not part of the public sector at the same time. This is a construction sometimes seen with suspicion outside because it's not understood that it could be state-owned but not be in the public sector. Its liabilities are guaranteed by the federal government. In fact, it was founded in 1948 with funds from the European Recovery Program, better known as Marshall Plan. The core business is financing international development projects and export financing, as well as the administration of government support programs, and that includes loans to businesses, loans to homeowners when they improve the building's energy efficiency or set up renewable energy installations. And the ERP special fund is still used for its original purpose to promote the economy. They offer a wide variety of support programs, including an important green sector promotion program. However, with very few exceptions, KfW normally does not deal with the customer. They do this by loans channeled through local banks. They act as a kind of network of branches providing a one-stop service to the customer. The guidelines for them are, first, market conformity. That means always never financing a whole investment. They finance part of the investment, but there has to be private risk in it. Subsidiarity. They concentrate activities on sectors which are not or not yet served by the private sector. They do not crowd out the private sector. And non-selectivity. They have to avoid these famous models of picking the winners. They are not picking the winners. Structural change and where the winners are has to be market-driven. As you know, in the UK, there has been a discussion about setting up a state-funded business development bank modeled on KfW, and I think up to now, the institution coming closest to that is the Green Investment Bank proposed by the previous government to facilitate the transformation to a low-carbon economy. Because here there was the feeling that the markets were not ready to finance this already. Another German institution widely discussed in the UK is the FraunhoferGesellschaft, Europe's largest application-oriented research organization, in fact, and well known for having the patent for MP3 players, or for MP3 code as such. It has a reputation for bridging the gap between academic research and the commercialization of its result. And for growth, innovation in products is important. It's not enough to have innovation in thoughts, in ideas, in patents. It has to come to the customer. The FraunhoferGesellschaft receives 30% of the funds from the public sector, but 70% from the private business through a contract. So they have an annual budget of 1.8 billion euros through this financing. I think there is no institution in the UK that quite matches the FraunhoferGesellschaft. The Technology Strategy Board sets out strategies and makes funding available, but it doesn't run own research institutes. While in Germany we have 60 Fraunhofer research institutes all over the country. Certainly the TSB's work is at least very close to the Fraunhofer principles. Other institutions in this country, like the University of Glasgow as an example, decided to go into a direct cooperation and made a contract with the Fraunhofer Institute. We have heard from UK business representatives, as well as from many German CEOs in Britain, that the lack of skilled labor is an obstacle. In Germany, we tackled this problem, improving even more the vocational training schemes with a focus on young school leavers. Youth unemployment has been contained mainly at a lower level by making an effort to offer apprenticeships, and this is a very close cooperation with the whole industry in this, and particularly with SMEs, to offer this apprenticeship to a high proportion of the young people leaving school each year. It's important also to develop profiles of qualifications matching demand in the labor market. This is an ongoing task which the government is also supporting, and the labor market certainly gives vocational training only a good start if it is not a dead end, but an avenue which can lead even to make a career up to the top in a company. So it has to be flexible and open, and which may even lead to academic qualifications. We had very good results that the vocational training system is helping in tackling youth unemployment and supplying industry with skilled labor. May I mention some intangibles which I think are not unimportant for growth in Germany, because all this, the whole working of the companies, many of them, as I said, family companies, work in a social environment. They work in society as such. And if society is supportive, this is a growth factor. First of all, our political life may be still more long-term oriented and less dependent on day-to-day press review. You can see this when politicians even try to vote against what seems to be public opinion in the polls, and because they know quite well polls are volatile, and the reckoning and the bill comes at the elections for success and not for accommodating. So there's always a risk of populism in all countries in Germany, but maybe we are a bit a latecomer on that. German companies are organized in the local and regional chambers of artisans or chambers of trade and industry. Membership is paying, and it is obligatory. This is not always popular because of the contributions to be paid, but it gives enterprises a very strong voice on all levels, and it brings the entrepreneurs together, forming in very influential networks. So the matching is a bit formed by this. It's not very tangible, but I think it is important. And as the superstructure of the German Chamber of Commerce on the national level, it certainly has a voice, and no government will do anything in the economy without hearing them. There is not a very strong culture of hire and fire. This can only be possible, as I said before, when the SMEs, and these are the most important employers, have some leeway in their financing. You cannot have such a system if you are in trouble whenever you need finance and the business cycle is not the best. But this made short-term working more efficient. This could even be working without state support. It's interesting that this model, which has been discussed also here in Britain, has been implemented, half of it has been implemented without a penny from state support. Half of it has been implemented with state support, but not all of it, but just by having contracts or treaties between the unions and on the level of the company itself. It means that people renounced on part of the income for having short-term work, but at the same time keeping the workplace and being able to enter the market immediately when the business cycle was better again. And certainly the expectation is still very high in Germany. This is pure psychology, maybe, that the economy will provide enough jobs in the end, with all the problems we have in our societies. We have something which not all CEOs love as a German speciality, that's the co-gestion in bigger companies. It has an advantage, and the advantage, particularly CEOs very well know, is that the representatives of the unions on the supervisory boards know the numbers. And normally they are willing and able to convince their members that it must not be a very good idea to risk the existence of a company in a crisis. Certainly the unionists then also know very well the numbers if it goes well, and when it goes too well for the top management, they may mitigate that for a little bit. There's a clear understanding that in Germany we see a very close link between services and the manufacturing sector. It's a myth that Germany is a desert for services. But our services, in our service sector, is very often very near to production. And it is not very clearly separated in the GDP numbers. When you buy a turbine from Germany, you buy also system integration, you buy service for a lifetime, and you buy, for example, quality control. And quality control, I think, is for growth as important as good financial control. It should be on the same level at least. And last but not least, German states and cities have very decentralized structures. Germans are, by the way, struck often when they come to Britain how centralized decisions are often made here. It is not well known there. And cities and regions are proud of good infrastructure, social infrastructure like healthcare. They offer cultural events, childcare, libraries, new media, excellent public transport, affordable housing, renting or buying, even in central areas of the cities. All this is seen as part of public infrastructure, and cities and regions base their advertising for investors and for people who are looking for jobs on the comparative advantage of these factors. And I think this makes sense. All this certainly has a long-standing tradition in Germany. Not everything is always sustainable. It's a dynamic environment. But anyway, we try to adapt in an evolutionary manner and stick in the end to our small little Rhineland capitalism. It may not be the most efficient one on every day, but it is rather stable. And I think we have a certain tendency to not run after the last outcry of fashion and try to think a bit more on long term. Thank you.
Ambassador, thank you very much indeed. Small Rhineland capitalism. Well, that's one definition of it anyway. Thank you very much. There is an opportunity if you wish to take any questions you mentioned.
Yeah.
Just for 2 minutes.
No problem.
Tom Harris, Standard Chartered Bank. Ambassador, you paint a rosy and but deeply impressive picture of your small Rhineland capitalist system. And it has clearly, at a time like this, many attractions to an economy like ours. And it stands in stark contrast with the other model that we look at, which is the United States, which is very different. Entrepreneurial, creating new high-tech companies, Yahoos, Googles, Apples, and so on. And I just wonder, while it works for you, what lessons there are, if any, for us? Because it's a system in Germany that relies, as you've described, on a high degree of regulation. The example you gave of mandatory, you're compelled to belong to your local chamber of commerce. I find that impossible to imagine any British government compelling British companies to belong to any organisation. But it also relies, particularly in the services sector, which we are most concerned with here, on a high degree of protection. Most of your services sectors are not open to competition. There was mention earlier this morning about energy, transport. Germany is not open to foreign investors, but it's also true of many professional services where Germany has effectively opted out of many of the EU provisions. Is it really desirable that other member states should follow that model? Because if we were to follow that model of making it extremely difficult for foreign investors to come in to provide new forms of services, my own view is that that would be extremely damaging to the EU. Comments, please.
First of all, I did not speak of Germany as a model, because it's very difficult to imitate it, and therefore I insisted so much on the environment in which all of this can grow, because there is a historic, grown structure. And there's no CEO in Germany who will really complain about being forced in the Chamber of Commerce, because he sees there's such a huge advantage for him, having real influence in whatever is on local, regional, and national policy, that he will, in the end, grumble a bit about the contribution, but nothing else. It shows only that you cannot always transfer one model to the other. The model in the US is certainly one which could only grow in an immigration society. This model, I think, would have been explosive if you would have it in a Europe without immigration. It may change, because now we have a lot of immigration in Europe. We need it also. We have a demographic problem. And so this may become more open in that sense. But to not look into what is the social fabric makes the economy solipsistic, autistic, and catastrophic in the end. And I fear that if in the US you do not do anything about that now in the last 10, 20, 40 years, it's only the 1% on the top who really have a gain of it, and 99% of the population do not. This is not a sustainable social fabric. As long as you have certainly 100 million Mexicans at the border, you may mitigate that. But I would doubt if you can do this if the economy becomes more closed there, because I think we have a kind of convergence. Ours will become more open, and in the US it will become more closed in that sense. And both have to think about what is really sustainable. As far as services are concerned, when I want to insure my car, here in Britain I have to take a British-based insurer. In Germany I can take everybody who's insuring in Europe. So this is not very clear, the picture. The main problem we have in Germany is that services can be extremely open. You can go in most of the services. The problem is that, for example, with the ideas Bolkestein brought, he was deviating from the principle of harmonization, which is normal in the European Union, to the principle of accepting the standards of the sending country. And if you have to accept standards of a sending country and you get workers from Hungary who have absolutely are below every health and safety standard, and you have them on a construction site, you cannot do this without regulation. And I would even be sometimes quite content if we have a little more regulations who is allowed to go on a construction site to construct a house. If I see how houses are constructed in different parts of Europe, harmonization would be quite good, at least if you have a minimum standard for those who go there. I would wish you a minimum standard for plumbers here, and we try to keep ours.